How you doing, man?
I'm doing good. All right.
Yeah,
Yeah, thanks for taking the time
nice.
out.
How did you know my channel?
So,
Was like someone asked you or showed you?
yeah, I've been asking people on Twitter, like, who are some good people to interview with investing, who's the most interesting people they follow. And then several people have mentioned you. And so I went to your, Twitter site, but also your YouTube channel, and I started to watch your YouTube videos, but, they're all in Portuguese, so I had a hard time.
Yeah.
But then
Yes.
I was like interested. I was like, like I could catch a little bit of what your kind of style is. And so I went to your website and I started to read up on kind of your investing philosophy. And so I had to do Google
Nice.
Translate, and I kind of got the sense of what you're up to. So I started to
Nice.
sense this guy's long term, investing strategy, analyzing companies. He's trying to help new investors, really get the skills to analyze and make their own decisions. And then I started to think like, like I think you've got something going on. Like there's like
Yeah, that's exactly that.
yeah, you do.
I think that probably some of my subscribers. I started my YouTube channel in 2017,
Mhm.
but about 1 year or so, I started to talk to bring more USA stock market content to my channel. I invest in US stock market since 2015. 2015, yeah, I think it was 2015. But I started to bring this concept to invest abroad to my subscribers about 1 year ago because I think it's really, really, really important to Brazilians to invest in the US stock market as well. So a lot of people started to ask me, Fabio, what kind of American YouTube channels do you follow? What do you recommend for us? And etc. So I started following you. I think you had something about 10,000 subscribers. I think it was when I found your channel. I
Mhm.
was trying to find some informations about Tesla. I also invest in Tesla. So I YouTube recommended me your videos, so I started watching, and then I started to recommend your channel to my subscribers. So probably the ones that were asking for you interview me are probably my subscribers that went to you.
I think so. Yeah. Yeah. That's great. Yeah, I'm really curious because it seems like you've got like a very loyal kind of following of people who've like learned from you. And I was DMing actually with some of, your followers who are my followers
Hmm.
too. But I was like, so what does, Fabio really help people with? Like, what does he, do well? And some people are saying like you help them analyze, the companies, the financials, you help new investors really kind of get the skills. So kind of like, I'm curious, like, I want to talk about that, like how you help,
Yeah.
right, investors, like what you think is the most important thing. I also want to talk about the situation in Brazil, the Brazilian stock market versus the economy there as well, but
Yeah.
also versus investing abroad in the U.S. And
Okay.
yeah, but first wanted to ask kind of like how did you get started with YouTube? Kind of what was that moment, that time where you said I want to do a YouTube
Uh,
channel?
since I was born in 91. It was when I was born. So since I was little, as like I was, yeah, I think it was 2008 when YouTube started to grow, like the platform. So I was always engaged with YouTube, but I never thought that there was a space in YouTube to talk about investment. So I started investing in the stock market here in Brazil in 2008, right after the stock market crash. That was all the fuzz about it, and the journals were talking about it every day. So I started investing in the stock market in 2008, but in 2007, I think it was 2017, I started searching YouTube about this stuff like investing, like stocks, And Brazilians have the culture to just invade social medias, right? So at the time we had some channels here with 200,000 subscribers, 300,000. So I saw that there was a space to talk about investments. So I started my YouTube channel back then. So I just tried to bring what I was doing since 2008 and what I was doing right and what I was doing wrong, and trying to bring my philosophy for the audience about the long term, like the shareholder vision, not the trader vision, the long term, the change between viewing the stock market as a place to make money to approaching the stock market as a long-term place, so you can put your money that you are working as an engineering, or you're working as a dentist or whatever. So you can use the stock market to build wealth, to build a long-term portfolio. But I think that what what my channel is different from the others. I think that I try to get really technical. I think you have the same approach when you analyze Tesla reports, when you open the income statement, you show what is going on, what's not going on. That the kind of approach that I do here in my channel in Brazilian stocks and US stocks as well.
Hmm. Interesting. I'm curious, like a few weeks ago, I interviewed a YouTuber from Korea, or he has a Korean channel that's blown up in the past like 6 months. I think he has like over 150,000 subscribers in like 5 or 6 months, and he focuses just on analyzing companies, and he does kind of the long
Yeah.
format, and people just eat it up and they love it. And he
Hmm.
was saying how part of it is the culture in Korea is everyone is focused on short term and trading and betting, and there aren't a lot of people really with a long term kind of company analysis focus. Like I'm wondering, how is the situation in Brazil? Like, do you have people who is it easy to kind of teach a long term perspective, or do you find it kind of more difficult?
Yeah, I think that the main difference between the US stock market and Brazil stock market to begin is that we have a really narrower stocks types. So we have in US stock market we have stocks that are really less riskier, also stocks that are really more riskier. So we are kind of narrow because here in Brazil it's really difficult to a company to get into the stock market to get new investors. To a company to be listed here in Brazil, it has to be something like maybe $500 million in market cap. So it's difficult for new companies to get into the stock market. So we have something like 400 companies listed here in Brazil. We have great companies, and we also have a lot of new investors. Like 2 years ago, we had 1 million Brazilians invest in the stock market. Today we have something about 3 million investors. So it's growing. It's growing really fast. We're having the lowest interest rate of all our history here. We're with 2% interest rate for the short term, the government bonds. So a lot of people are going to the stock market. And I think that a natural start for beginners, that was the start I I like the type of investment that I started was like trading, because in 2008 we didn't have a lot of information in the internet, so I had to read a lot of books. I tried to read the Alexander Elder's books as the beginning, like trying to understand what was the stock market, like what was trading. And when I changed it from trading approach to a fundamentalist approach, to understand that there was companies that are people behind the stocks, people inside the companies that try to make the company more valuable, that are working all the time. That was when I changed my perspective. It was also when I read the book Stocks for the Long Run from Jeremy Siegel. Was a game changer book for me. And then I was trying to make this approach for the long run. Here in Brazil, we also have some vehicles like REITs, like American REITs. We have something like this here in Brazil that I think it's a maybe it's easier to invest in this type of vehicles because you're getting rent from real estate equity and etc. And that's it. But I think that it's normal for new investors to view the stock market as trading and then growing up and viewing the stock market for the long run. I
Hmm.
think it's a natural uh, it's a natural I'm missing the word. It's a natural way
Yeah.
for
Yeah,
investors.
I definitely I see that too. Like in the beginning, people might be tempted to and people are impatient too. So it's like you do some trading. Sometimes it goes well, sometimes it doesn't go well, and eventually maybe you lose some money. And you're like,
Yeah.
some people drop
Yes.
out,
Yeah.
completely, but then some people are like, wait a minute, why are other people making money, or how are they making money? And they might research.
And then they call it lottery, right?
Yeah, exactly. Yeah. Um, yeah, I'm wondering, I guess with your kind of investment approach, how many stocks do you typically hold in your own portfolio?
I like to have a really, really well diversified portfolio. So I like to hold ETFs, I like to hold stocks directly, but summing up the stocks in my portfolio here in Brazil and the stocks in my portfolio in the US, it's a little bit more than 60 stocks.
60 stocks. Wow.
Yeah, but I saw your Twitter. I think it was last week that you tweeted, how does investors that hold a large amount of stocks can really keep up with what's happening in all the companies? But I see like having a well diversified portfolio is like you don't have to really know that well all the stocks. The more stocks you hold, the less you really read you really need to know about it because you're diversifying. And since you have like five stocks, you really have to know really, really, really well each one. And I think that the thing about having a diversified portfolio is that no matter how great investor you are, no matter uh, how great is your analysis, you can always be wrong, right? The future is filled with uncertainty, so things can change really quickly. You can make bad decisions. So I like to have a really well diversified portfolio and to mitigate that risk, right? To reduce the specific risk of each company holding a lot of companies.
Yeah. Yeah. It seems to me like, this concept or idea of diversification versus focused investing, like there are pros and cons definitely of both. I think with more of a diversified approach, you're going to probably get, you're capping your returns in some ways for that additional
Yeah,
safety, right? So you're not looking, for example, to 10x your total portfolio,
yeah,
with a certain number of
yeah.
years. Like that's kind of like a little bit out of the question. You're looking for more stable gains, trying to maybe beat like the market, right? By having a better set of stocks. Um,
Perfect.
yeah, yeah, I totally get that. I'm wondering, in your kind of own kind of investing, have you tried to maybe say, hey, like I'm researching these stocks, but this one stock or these two stocks just like really are just amazing stocks. And do you get tempted to say, hey, maybe I should put in like 40 or 50% of my portfolio in, one or two stocks?
No, I don't like that approach. I like when I see a company like Tesla. I started investing in Tesla not so long ago. It was 2018, 2018, and I, that was when you maybe know better than me, but it was when Tesla started to positive it operating cash flow. I think it was $2 billion cash flow 2018, but that was when I looked at Tesla and I saw it. Well, I'm starting to build a really small piece of my portfolio in that stock because I saw a lot of potential. I see as well a lot of potential in Tesla, but as it was very riskier company, like it's not a company that a type of company that I usually hold in my portfolio. But when I see a company like that, I try to hold a small amount of my portfolio. It was back then 1% of my portfolio in US. So 1% was on Tesla, and then the stock just ramped it up like 10 times, something like that. Yeah, it was like 10 times from 2008 to today. Until so it was from the my Tesla position was from 1% to 10% of the portfolio, which is a really big position, right? For a diversified portfolio to hold one stock, 10% of only one stock is kind of concentrated. So as I'm trying to hold the stock for the long run, like forever, like really like Warren Buffett style, I don't want to have a really big portion of my portfolio in each stock because I think it's going to be way harder to hold the stock because of its volatility, right? I think that you need to have more conscious about and to be more. I think it's more difficult from the perspective of the emotions, right? To have one stock with 50% of your portfolio representation. So I try to make this kind of approach. I don't try to say no to this kind of stock, but I try to make little investments, like a small amount of my portfolio in riskier stocks.
Hmm. Got it. Like I'm wondering, like I think my doubt or skepticism of sometimes diversification is I feel like um, there are three, this is kind of oversimplifying, so I'd love
Hmm.
to discuss, but
Okay.
there are three maybe oversimplified approaches. So one way is just index fund, just
Yeah.
S&P 500 or total stock market index fund. And, if you invest in perhaps the right type of market that's
Hmm.
growing, then, you will track the market. And especially like, I look at, we're still in the middle of a computer revolution, internet revolution, and starting a artificial intelligence revolution. So there's massive change and disruption. So I think overall it's a good idea to be invested, in the market, in the companies that are taking advantage of these revolutions. So I think overall, like index fund investing, like personally, I'm not, doing that because I think I can do better. But I think
Hmm.
it has definitely its appeal. I understand that. And then it seems like you could do better than index investing if you just know how to filter the companies better. Like
Yeah.
like I had this idea of like, just take throw out half the companies in the S&P 500 that don't have much innovation, that don't have much, artificial intelligence or technology, etc. And then if you're left with half, then you'll probably do better, Um,
Yeah.
and so in a way, it's like kind of it's more filtering. You're still getting large exposure, but you're filtering maybe the better companies. But then I kind of wonder, for most individuals, it seems like a lot of work to filter,
Yeah.
all these companies.
I
Um,
think of ETFs as something like an insurance for the long-term investors, because no matter how bad you are at stock picking, at the part of your portfolio there that you are really picking the stocks, like the ETFs are like the safe place. Like it's not going to really bad, and it's not going to 10 times your portfolio. You're gonna get an average return, like the market return. So I see like that portion of an long-term investment portfolio like an insurance type of building wealth. And when you concentrate in some stocks, right? When you pick some stocks, you really have to know what you're doing.
mhm. Yeah, definitely. Because like part of me thinks like you could do better than the S&P 500 if you choose maybe like a innovation focused type of ETF or something that is managed well. Um,
Mhm.
but then like the alternative is like, if you're wanting to pick your own stocks or wanting to build your own portfolio, my question mark is, do you think people can really like pick a diversified portfolio that's going to outperform, let's say, the ARK Invest, like the Cathie Wood ETFs, you know? Like, are they going to really put
Okay.
together 20, 30, 40 companies that are going to outperform, like, you know, some of the best out there?
Yeah, I think that I don't think it's a problem to not perform better than the S&P 500, as well as you have less risk in your portfolio, right? So what I try to tell people is that you don't have necessarily to beat the market, but you have to be you gotta have a risk return adjusted portfolio, right? If I want to have only less riskier stocks than the index, okay, I'll not perform. My performance will be probably lower, worse than the index, but I'll have less risk in my portfolio. So I think it's all about that risk and return type of balance in a portfolio. I think that I'm a huge fan. It may seem controversy, I think, but I'm a really fan of efficient market hypothesis because I don't think that the market are too stupid for pricing an asset. But I think that what is in the hands of the investors is try to know what risk you're incurring in that investment and know what type of return you're expected to have, and then build your portfolio over this strategy. I think it's something like that.
Hmm. Yeah, yeah. I mean, like, yeah, I'm having to. It's interesting you talk about risk versus reward. I think, you know, it's important. Like, my parents are retired and they're older, and they have they've moved their house, so they're debating whether or not to sell their condo apartment, and my dad tends to be a little bit like tempted to, you know, invest in the stock market, but when he invests in the stock market, it's not necessarily in the lowest risk, you know, assets. And so I'm kind of encouraging them to just, hey, maybe you should keep the apartment and rent it out because it's a safer
Yeah,
asset. You might not get, you know, as much returns as maybe a higher risk asset, but the advantage of lower risk, you know, is a huge advantage. You know, I don't think people understand the appeal a lot of
yeah.
times.
I think that a challenge for a new investor is like I see a lot of new investors to just they just try to know what returns they can have, right? What are the best stocks? What are the stocks that can have really great return? And that's fine, but you have to also watch the risk at the same time. I see a lot of new investors only watching the return part and not concerning about risk. And I think that you have to have the two balances. I prefer to watch first. I watch the risk, and then I start to thinking what are the returns, the possible returns incurring that risk. I think that I like to have that approach when I'm analyzing stock or I'm building a portfolio. I like to balance that well
Hmm. Yeah, I mean that's
because
interesting.
with high expected returns, there's always a lot of uncertainty, a lot of risk. Risk is uncertainty, right?
Hmm.
We can say that. So when you have a lot of uncertainty, you can do really bad as well as you can do really, really well. So you have to know what is your objective, right, with that investment? What are you trying to achieve with that portfolio? What is that portfolio about? Because a lot of people ask me, I don't know if you probably you have a lot of this type of question as well. Like, what is the best portfolio? What are the best stocks? And what I try to say is that there's no such a thing as what is the best portfolio. What is the best portfolio for you, right? Because investors have different type of objectives in life, right? If I want to preserve my wealth, maybe I'm trying to invest in stocks that are doing that. If I want to 10x my portfolio, I'm trying to invest in that type of stocks. You can make a mix of these two type of stocks. Like I like to have that approach.
Yeah, like one of the challenges, because like for me personally, like I understand risk. I'm actually very like risk conscious, like very much, and that's why I actually have like a separate type of basket of assets. So I have like some income producing real estate that covers my living expenses. So when I go into stocks, I can be more risky because it doesn't really
Yeah.
mean that much to me, and I'm okay with losing it, and so it allows me to take more risk. But oftentimes when I see people in the stock market, they're so tempted by the big gains that they underestimate the risk, you know? They think like it's
Yeah.
going up, up, up. Everything, oh, it's always going up. But they don't realize like there is a lot of risk a lot of times, you know? Um, to especially when you expect higher and higher return and you're going for those returns. And that's why like on my channel, I have a hard time recommending certain stocks because my interest is kind of higher risk, but I understand that risk because I'm like,
Yeah.
this stuff is like high risk, you got to know what you're doing. And a lot of times I don't feel people in general have the motivation and the discipline to study and research like a stock that has high risk. Because for me, I mean, like I kind of disagree with the whole efficient market, theory a little bit. Like overall, I can see it working, but I think there are certain instances and cases in history where the media and the overall culture and a lot of the mainstream ideas around a company or a trend oftentimes makes people discount that company or that trend. Like, for example, with Tesla, there's so much just FUD and bad media and everyone making up a lot of stories about this company when the fundamentals are actually, getting better and better quarter after
Yeah.
quarter, 2018, 2019. But you would just by looking at the media, you would imagine this company is like, is going to die soon. But I think there's certain times where it's just like, there is opportunity that if you're really researching and you know how to analyze numbers and value a company, then you could spot some opportunities. But I agree with you, it's like very high risk. And most people, I feel like they don't account for those risks as much. Um,
Yeah.
yeah. So yeah,
Yeah,
definitely.
I think that yeah, I think that that's perfect. I agree.
Yeah.
Yeah, that's
Yeah,
it.
yeah, yeah. I think the other thing which is interesting is when you when you look at risk, um, and you kind of look at the higher risk you take or the more reward you want, the higher risk you're taking in some ways. Um, Oftentimes, I think it's healthy in the way that you can start to focus on income, like your own, just because you need to bring more money into your
Yeah,
portfolio,
right.
right? Because I think sometimes like people think that they just have a set amount and they think this is going to make them like, millions and millions and
Yeah.
just by betting, but they don't focus
Yeah.
on this salary or income or business or something, to bring in. And how do you, what are your thoughts with that?
That's exactly what I tell to everybody. No, nothing will make more difference than the amount of money you make in hard working in your job, right? That 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 will make the difference. That's the game changer. And the stock market is there only to serve this money that you're building outside the stock market. I see this way. So you have to work hard, you have to save money as well, and you have to invest better, right? So I think that people usually tend to overestimate the potential of stock market in building wealth, and sometimes spend a lot of time in the stock market analyzing, and they could be working and putting more money in the stock market, right? The the objective is to the purpose, right? Is to build a huge wealth that will provide you financial freedom and etc. So you can do that making money out of the stock market and putting there, or trying to spend a lot of time in the stock market to trying to analyze something, and that will change from investor to investor, right? If you have a really, really, really great and big wealth, you have to spend more time. Maybe, né? You should spend more time analyzing and trying to get that extra 1%, right? And or you could just work more and put more money. So you have to balance, and you have to understand where are you in this range, right?
Definitely, yeah, yeah, totally see that. I'm curious, like with new investors who are starting out, like what are the top 3 or 4 things that you focus on teaching them? What do you think are kind of the most important skills to build?
I think that this mindset, like work hard, save money, and invest better, is the three main factors. But when we look at the stock market, I really think that a great ability is to know the basics of accounting, right? You have to know how to read a business, uh, what the company is saying to its shareholders, right? If you don't know accounting, you are not going to know how to read that. You don't have to be an accountant. You have to know the basics of accounting to read that. So I like to give a lot of content in that way. So how to read a income statement, how to read a balance sheet, how to read a cash flow. And I also think that knowing these principles, the basics of accounting, is going to improve the person in their job, right? Because to know the language of business that is accounting is a good proficiency to have. And basically that's the fundamentals, right? And then you have to start to dig to understand the how the business is built, what are they are trying to achieve. What I like to say, that it's really good to know where the company came from, where the company is right now, and where the company is, what is the company trying to reach for the long term. I think that general concept is the fundamental of my approaching my analysis approach.
Interesting. And like, how do you teach valuation? Like valuing, like, let's say a person, they're understanding the basics of accounting, income sheet, balance sheet, cash flow. They're understanding a bit of the company. They're reading the reports, but then like, how do you teach people like to value a company and whether it's undervalued or fairly valued?
Yeah, that's really interesting, because in my view, when you have a well-diversified portfolio, I like to have other approach than making valuations, because all valuation methods you have to put a lot of information in the model, right? And you have to put good information to get good results. But when I think about building a long-term portfolio, I'm more interested in the long-term signal. I don't know if signal is the word, but the we have a signal and we have a noise, the short-term noise, right? I'm trying to focus. What is the signal that this company is showing me? And I know that I'll have the short-term noise, right? So when I decide that that signal that the company is giving me is a great valuer creation, I'll decide that I'll have that stock in my portfolio, right? So to have or not to have the stock, like let's think about Tesla. Tesla have probably a great future in all that segment lines. We can talk about that later. But when I decided that I want to be exposed in Tesla stocks, I'll put it in my portfolio. So I'll decide that first. The second thing is what percentage of my portfolio I'll be taking that Tesla risk, right? So let's say in my case, it was 1% of my portfolio, and then it went from 1% to 10% only with the stocks rising. But it was 1%. As I defined that I want 1% of my portfolio in that stock, I will always invest in that stock when it have it has less than 1% of allocation, right? Because if you think about it, when a individual investor is investing in the stock market and is building a portfolio, it has every month you have income coming to that wallet that to your portfolio that basically is your savings. So you have to allocate somewhere, right? And determining the percentage of each stock in your portfolio, I think it's the best way to build that portfolio independent, regardlessly of the price, the value of the asset, because it's to hold the stocks for the long run is the best tax efficient way to invest, right? If you're changing your portfolio every day, every month, you're having capital gains, you're paying more taxes, and you will finish with less wealth, right, in the long term. So I try to focus to not sell the stocks, almost never, and then invest in that portfolio that I determined the percentage of each stock every month to meet that portfolio. So I have an objective portfolio, like with all the percentage of all stocks and the current portfolio. So I always invest to try to make my current portfolio look like the perfect portfolio that I try to reach.
Got it. So what happens when one of your stocks like makes a big run? Let's say Tesla does 10x and you're at 10%. Do you trim your position to try to get it back down to something?
No,
No, you just keep it.
I just keep it because I'm not going to sell. I'm not going to pay tax capital gains on tax on over capital gains. The tax here in Brazil is the same as in the US. We have some little difference, but mainly is the same tax calculations. So, okay, I'll sell 9% of my Tesla gains, and I'll pay 15% of the gains in capital gains, and I'll probably in 10, 20, 40 years, that will make a lot more difference than to try to rebalance. So all the rebalance of the portfolio I make with the new capital that is going into every month.
Got it. So is Tesla your largest position then, or is there some other stocks you have larger positions in?
It became my largest position in US. It was 1% and then it became 10%. It's today I think it's something like 12%, 10%.
Okay.
It's the larger portion.
Okay, so that's a very large position for you, I imagine, right?
Yeah.
Got it.
Yeah.
What's your largest non-US stock position?
It's called VEG. VEG also has an ADR listed in US. It's WEGZY. It's one of the largest stocks here in Brazil. It's a company that make electric motors for industries. Like they make that's the main business that they have, and they have 80% of the Brazilian market share. They are also expanding to America, to other countries here in Latin America, South America, Asia, Europe. So it's a great company.
Okay. And what percent of your portfolio is in that company, if you don't mind me asking?
Of my Brazil portfolio, it's something like 20%. So I have a lot of stocks, but some stocks, that stock specifically went from 10 Brazilian reais, which is our currency, to 80 reais. So it went up really fast as well. Not in the short term as Tesla, but since 2011, 2012, that was when I started investing in them. So I have a lot of companies actually in my portfolio, but I have some stocks with a large portion, not a big portion, not that much, like Tesla, like VEG, like Itaú is the largest bank in South America. It's a Brazilian bank. We have a lot of financial stocks here. Are some of my largest companies. I also have Ambev, which is, do you know Ambev?
No.
Ambev is a subsidiary of Bud, like that is listed in US, right?
Mhm.
The
Mhm.
brewing company. Uh, are some of the stocks that I own with a large portion of my portfolio. But in the US stock market, I like a lot Amazon.
Mhm.
It's a company that I started investing in, I think it was 2018 was when I started investing in Amazon. I think I could have invested earlier, like when I started in US stock market in 2015. But I was building my REIT portfolio in US stock market. Then I was trying to buy more stocks. Amazon is a great case. I like very much I like as well as Tesla have Elon Musk. We have Jeff Bezos at Amazon. I like the like Amazon don't care about the short-term profit, right? They're all about customer experience, a lot about market share, cheap service, pushing retail limits every day. I saw, I think it was you made a video some like this week or last week that you were saying that you bought a paper rim at Amazon that was $4 and it was
Mhm.
how are they how are they how can I get a free delivery, free shipping, right?
Mhm.
In this $4 rim. And probably that's because they already have an Amazon van at the door of your house every day. But I think it's a great case. I like Amazon, and
Mhm.
I also invest in Chipotle. Do you know Chipotle?
Yeah, 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 definitely.
Do you like Chipotle
Yeah, yeah, I
uh,
do actually. I
as
think,
a customer?
yeah, yeah. I haven't eaten there in a while because of all this COVID thing going on, but yeah, yeah,
Yeah.
I definitely like the place.
Where do you live?
I live in Southern California, kind of near San Diego.
Nice.
Yeah.
Uh, Chipotle was kind of a emotional case for me, my portfolio, because when I went to, I think it was Miami or Orlando in 2008 with my girlfriend, now my wife, Laura. Laura lived in Texas, in Dallas, for 4 years. And when we went to Miami, she told me, we have to go to Chipotle. You're gonna love it. She loves Mexican food.
Mhm.
And we went to Chipotle. I'm a huge fan as customer. So when I started investing in US in 2015, I was like, let me take a look at Chipotle, like the stock, right? From a shareholder perspective. And I liked it. They have really great numbers. They went to a difficult time in 2016 because they had some equal problems, but they recovered really well. In my opinion, I invested in them since 2015, and I think it's a great company as well for the long term. These three stocks are not the type of stocks that I hold uh, in most part of my portfolio. Tesla, Chipotle, and Amazon are growth companies. The three of them are growth companies. But I think that the thing is to balance your portfolio, right? You can have growth stocks, you can have dividend stocks. In your case, you told that you have some income from real estate that you can have some predictable income from that type of investment that allows you to invest in a riskier way. So I think that the key for a new investor is to try to understand your reality as a person, as a how do you generate income in your family? How is your family generating income? And if you are a business person, if you are and employed or self-employed, how do you get that type of income? And you have to invest in a way that you can sometimes hedge the type of income. It's fun because a friend of me, he told something that is very interesting. That it was something like the way a person invests usually is the way that it makes everything in its life. Like usually who wants to bet in the stock market, like in the short term, like make make money really fast, or try to make that, they are trying to make that in the other part of their lives, right? And maybe the key is to balance, to make the opposite. If you have a really stable income source outside the stock market, maybe you can have more risk stocks in the stock market. But if you're like you are a businessman and you have a really unstable income from your company or something like that, maybe trying to reach more less riskier stocks, right, in your portfolio. I think that to understand that and to make that equilibrium is the key for the long term.
Yeah, interesting. What's interesting about some of your strategy here is like you will buy a company not necessarily based on their valuation, but because you think they're going to create more value in the future, right? And they're a strong company, and then you will hold on to that company for a very long time, right? What do you do in the case of, let's say you look at a company like, let's say Shopify, or let's say Zoom, or some company that you might think this company has a great future because they're growing immensely, they are maybe top of their position,
Mhm.
but when you look at the valuation, you're just like wow, I just don't understand how it can be valued like this. Like, what do you do in that case then?
Yeah, I think I try to not invest in that kind of stock. Like Tesla as an example. I'm looking for Tesla since I started investing in the US stock market 2015. But I like to have some material to start investing, right? As in Tesla was the operating cash flow in 2018. I started analyzing Lemonade. I know you also keep up with the company, but when I tried to read it, it's yeah, I think was the 10K form. The numbers, I can't see anything, right? They have only the long term type of profit. So I usually I like to invest in the stock a little bit later. I know that the upside will be will not be that great, but I try to wait a little bit to see the company generating some cash, generating some revenue if it is the case, and then starting to invest a small portion of my portfolio. I think that investing for the long term in a company is like a relationship, right? I talk a lot of I talk a lot about it to my students, to people who follow me on YouTube, Instagram, etc. That it's like a relationship. You're not going to know that well that company like in a week that you spend analyzing the company, right? Every quarter you're going to get knowing better the company. New information is coming. You're going to like a relationship. When you start to relate to when you get into a relationship, you are knowing the person better every day, every month, every year. Then you decide to get married, and then you're going every year you're knowing better that person. Uh, and I think that is it's a parallel to the stocks, right? You start to invest in a stock, and then you're going to know the company better in the next quarters. That's why I like to every time I'm going to put a new company in my portfolio, I like to put a small position. And I'm going to build that position over the time as long as the case is telling me to do that, right? So I could invest, right? Like Zoom or like Lemonade as an example, or Shopify. But if I do that, I'm going to put a really, really, really small amount, and I'm going to build that amount over time, because I know that maybe the returns will not be that great as if I went with a lot of money since the beginning. But I like to balance that risk with the small portion of the portfolio. Like that approach to specify the percentage of each stock in my portfolio and pursue that allocation with the new investments is something like that, right? I'm telling I want 1%, and time will tell me if I'm going to reduce that to 0.5%, even though I don't sell the stock, but I'll put that small amount of risk, or if I'm going to increase its portion of the stock in the portfolio. I think there's some dynamic into it, even though I don't sell the stocks usually.
Yeah, I mean, that actually makes a lot of sense. Yeah, it's like on because when I listen to some of your approach, I'm like, it's different than, my approach because personally, like I have some different goals and maybe, different
Hmm.
situation, but I resonate with a lot of your risk awareness. You're very aware of the risk and of the balance, between risk and reward. What's interesting is like this past week, I was like thinking about stocks like a Lemonade or a Tesla or Amazon, or even like fast growing stocks like Shopify or Square or
Hmm.
etc. Like it seems like yes, you do get higher reward if you go all in big when it's the stock is low, but like a lot of times these companies are still far off from getting positive cash flow or profits, and you're taking a much bigger risk in that situation. And I was like just thinking, yeah, it's actually interesting strategy just to kind of wait for a growth company that's kind of
Yeah,
controversial to wait until kind of this critical moment of
yeah, that's
transition. And maybe that's from this like negative cash flow burn to maybe a positive cash flow burn, maybe like this tipping point where
hmm
the company crosses over, and the stock might be a lot higher than it is when it was really low, but you gain a lot more security or more stability, and you're still exposed to a lot more upside in the future. And so I was like, yeah, because like for example with Lemonade, it's still early on. They're still burning cash. They're still gonna
yeah,
be burning cash for quite a while, and it's might maybe you wait till that time when it becomes cash flow positive. The stock might be higher. Who knows how much higher, but there could be a lot more growth ahead, and you lower your risk tremendously in that manner.
yeah. That's exactly the way I like to approach it, right? And that I think that there's no problem to enter right now in any of these stocks that don't generate cash flow, a lot of cash flows, but with a little portion, right? That's my philosophy, like my style, and I like to do that, right? I'm always thinking about preserving it, preserving the portfolio or the portion of the portfolio before I'm thinking about gaining. So I usually accept this trade-off, right? To enter later and to have less, maybe less reward, right? But thinking about the long term, like as Buffett says, our holding period, favorite period is forever, right? So we have like so many years ahead. Why do I have to build a position right now, right? That's like what I try to think.
Yeah, yeah, interesting stuff. I love talking about this stuff because every person's approach can be different, but it all like sometimes touches on some principles, some ideas, like understanding risk, managing, your assets, your expectations of, what you're trying to do, your goals, of what you're trying to do. Fascinating. I want to talk about Brazil for a second. Like, what can you tell me about Brazil? I'm kind of fascinated by Brazil because,
Have you been to
I've
Brazil?
never been to Brazil, but one of my best friends is from Brazil, and I know several people from Brazil, and I always get along with people from Brazil for some reason. Like the culture, there's something about it, you know? It's just like I like, you know, just the feel of, you know, the relational culture there. And but I've noticed, you know, Brazil has been having a difficult time in terms of the economy. It doesn't seem like it's just kind of had a recession, what, in 2015, 2016. The past
Yeah.
7 or 8 years, it's been kind of flat. And it's interesting because before that, like let's say in the 2000s, like Brazil and in 90s, like this was a company that was growing very fast, had a lot of, you know, growth future. What happened? What's going on in Brazil? And
Yeah.
is it like from, because I'm looking at it from an outside perspective, but from an insider, like what's happening? And do you see optimism? Do you see hope of, you know, it changing?
Yeah, I think that it's important to everyone, including people who lives in Brazil, that Brazil is a country that is under development, right? We're not as solid as the great economies in the world. Like the Brazilian stock market represents roughly 2% of the world equity, stock market equity. So we're really trying to develop it, but we have some the problem I think with Brazil's economy is like our economy is hugely supported by commodities, right? We export a lot of petroleums like oil, gas, like iron ore, like Vale is one of the largest companies in the world. So our GDP is based on commodities, and commodities for a long time are in the lowest price, right? So if you put the graphics right over one over the other, like the Brazilian GDP and the evolution of the commodities price, you're gonna see a lot of correlation, right? And 2015 and 2016 was the years that we had some problems in our political scenario, like our president was impeached. Impeached is the word?
Hmm.
Yeah. Dilma Rousseff was impeached. Its party was here in Brazil since 2002. That was PT. And we had a lot of problems related to corruption schemes. One thing that is a kind of problematic here in Brazil is like we have a lot of probably the some of the largest companies listed here in the stock market are what we call mixed capital. So the government owns 51% of the company, and the other 49% is in the stock market, like Petrobras, that is our energy company of oil and gas, like Bank of Brazil, that is one of the largest banks here. Also, 51% is owned by the government. So the government have this power over these companies, and they elect like the president, like the administrators, and it's some kind of a difficult relation, right? You can build a lot of corruption stuff over this, and I think that we're evolving in that sense a lot. Like 95% of the stocks are not owned by the government. We have a lot of stocks that are private capital stocks, and but I think that that's one of the problems, right? uh, Bolsonaro, our actual president, is trying to, or was trying to, private these companies, like sell the government portion to the market to let the market uh, controls, or at least part of it, like selling the assets of the companies, not selling the ownership of the company, because they say that's strategy. Like Petrobras has a lot of oil areas that it owns. So they're trying to sell the assets of the companies, right? Not actually selling the its position in the company. But I think it's a step. Uh, I think that it's going to be great for the economy, but the political scenario here in Brazil is it's very problematic, and related to the commodities dependence of Brazil's economy is also when you have political problems with commodities at its lower prices, we have problems. Like it's what we're living. 2008 was a great year here in Brazil. Like if you watch the stock markets from 2000 to 2008, the our main index Ibovespa jumped it up like I think it was 15 times like the index from 2000 to 2008. But now, only now we are reaching the top of the index from 2008. So our index is really concentrated in one. Our main index, Ibovespa, one third of it is commodities, one third of it are financial companies, and one third of it are the other sectors. So we have this dependence of the financial and the commodity sectors, and I think it's maybe it's a very complicated and complex dynamics, right? But I think as we all have, like I think you may have some investors that watch your videos that are not from US probably, and I think that we all have a what it's called geographical bias, right? Because we tend to invest in the country that we live because we know the companies. Maybe it's more easy for the from the investment perspective, right? Like I know the companies, I know what a company do, and I'm trying to invest in that companies, right? But it's important for investors to be exposed to U.S. stock market because it's the largest market in the world. Like I think that U.S. stock markets represent 50% of all the world equity, and you can the largest companies in the US are also companies that generate revenue from other countries, right? From Europe, from Asia, from America, and you're going to have at the end of the day like a world diversification, right? Only reaching the stock market in the USA.
Hmm. Yeah, yeah. I think some people in the U.S. like, yeah, there is definitely a geographic bias. I mean, um, it's interesting that I think a lot of times people in the U.S. don't realize how global some of these companies really are. Like, you need to step out. Like, if you look at an Apple or a Facebook or a Google, and you look at all of the countries they're in the world and their position, their ranking, it's just amazing. You know, it's like
Yeah.
to the search or social media or video or devices. It's like, yeah, it's an interesting world that we live in. You know, it's getting more and more connected, I think, in a lot of ways. Yeah, Fabio, I want to thank you for spending time and chatting, getting to know you. Yeah, I think yeah, you're definitely onto something. I think you're building. It seems like a large following of people really fascinated with investing for the long term. Do you have any like videos or materials in English for, let's say, some of my viewers who maybe wanted to read more about you?
No, actually, I have a plan to start a new YouTube channel with videos in English. I have to practice more my English. I don't practice my English never, so I'm trying to think how we're going to develop this new channel, but it's some kind of a midterm thing. All of our content is in Portuguese, so if you're listening us from Portugal, you can reach my channel. We have a lot of videos there. And that's it. Thank you very much, Dave. It's an honor to be here to chat with you. Our channel is open to whenever you want to reach us. And
Awesome.
thank you very much.
Yeah, I'll leave a link to your channel below. And yeah, definitely want to keep in touch. I want to see, what's going on in South America and, see how things are going for you as well.
Okay, thank you.
Okay. All right. Take care, Fabio. All right. Bye.